Let's kind of switch the conversation here.
Yeah.
I think you touched on this earlier, but go ahead, Ava.
Yeah, let's dive into Needle, the company that you co-founded. You did talk about
Yeah.
some of the inefficiencies that you saw in the commercial real estate space, but explain the strategy behind Needle AI. And from what I understand, the platform flags properties that are already listed on the market, and I could be
No,
completely wrong there, but it doesn't,
no.
that are overpriced or underpriced. Let's hear
So
it.
it's designed for brokers and acquisition people to go out and get in front of opportunities before they come to market. So we're looking at things like changes in rental rates, occupancies, loan maturities, ownership behavior patterns, how often properties of this type, class, and vintage tend to sell, and larger macroeconomic events within the market and the submarket, and saying, okay, well, how is this property performing? We're putting all those factors together and we're saying, we think that this property is likely to trade, maybe medium likely to trade, and a lower probability of trading. And then if it's below a certain threshold, we don't even rank it. And so it's designed for brokers and acquisition people to be able to go out and get in front of these before they're listed by a competitor or purchased by somebody else. So really kind of giving you can think of it as lead scoring of properties to go out and get in front of opportunities before your competitor gets it, either as a broker or as an acquisition person. Because the common objection I would hear, especially being not native to the market, and some of my competitors had been in business for 20, 30 years, or they had handed down their practice to somebody else who had continued the legacy. Well, so and so sold it to me. If I'm going to list it, I have to sell it with them. But if you bring me a deal off market, I'll sell it. And I heard that so many times, and it burned me. It just annoyed me. It really, it pissed me off is what it did. And so it's like, well, how can we get in front of these? How can we beat that system? And so that was where the want and desire came from. And so I remember when we were first testing it, I would get like a lead set of 30 deals, and inevitably 7 or 8 of them would be in play somehow. Like I would have it listed, a competitor would have it listed. We were valuing it. It was under contract. Like it was somewhere in the deal pipeline continuum. And it's like, that's perfect. That's meeting the expectations. So ideally you want to be able to get to it before it gets listed or gets under contract by somebody else. So what we found is that some of our models are up to 80% accurate in identifying transactions up to 6 months in advance. So that means if there's 100 properties in a given market that we identify, up to 80 of those are going to trade over the next 6 months. We also have a buyer matching algorithm for the brokerage community that says, hey, if let's say this is a 200 unit 2000s vintage asset, if somebody owns maybe a 180 unit deal of late 90s or similar early 2000s in Indianapolis, chances are they're going to want to be in Columbus as well. So we rank those owners as likely purchasers. And what we found with that is that 70% of the time, the end buyer is in our lead set of the buyer ranking and matching.
Interesting. Interesting.
Mhm.